Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. It was a very choppy session right across the board. Now looking at the US dollar, which measures the greenback strength against a basket of 6 major currencies, the market shot up towards its recent highs that was seen in November around 96.90. After the US Federal Reserve key meeting concluded on Wednesday, investors giving a sigh of relief after the US Federal Reserve major meeting, that is, resulted in line with much expectations. The release of the much awaited US Fed statement published at the end of its two-day policy meeting continued to climb, that is, in the short period for the euro, as we can see that the market was somewhat observing what the Fed was thinking after Jerome Powell spoke at the news conference. The US Federal Reserve outlined a more aggressive plan to address inflation, unveiling steps to tighten monetary policy that largely met market expectations. However, they were talking of about 3 rate hikes next year to tackle inflation, rising inflation. Looking at the dollar, you can see from the rejection has put a slightly weaker play. It is quite surprising that the MACD, which has also been relatively negative, even though the market has attempted to climb. With the mixed aspect, when we view over towards the euro, we can see that the top side resistance is still roughly around 113.45, which is not too far away, as we're getting it closer towards that 113 level. Now above 113.45 does see a cap around 114, which I still anticipate and overall expect to see the market reject any rally and look eventually down towards the bottom side of the range, which is around 111. Also, eyes on the European Central Bank later today, but it is widely expected that there will be no change in monetary policy. The Australian dollar was also very whippy after rejecting that bottom side level of 70.90. The market is now back to the top side of the range. Also, the unemployment rate also gave a somewhat bullish welcome after the release earlier this morning. The Australian unemployment rate dropped by 4.6, below 5% forecast, and prior was 5.2. Whereas the unemployment change rose by 366,000 from a 200,000 expected after the previous month was a negative 46,000. So it was a bit of a mixed number there. Let's see how the market plays. Now, I do expect to see, like before, a rejection from that top side, but the resistance is somewhere around 71.70 to 72.15. From the rejection from there, I do anticipate the bears will be back into play and most probably see a retest of that downside level of 70.90. To some surprise for some traders, dollar yen is not backing down as it still continues to challenge this top side region of 114.15 to 25 on a wide. I feel that the market is struggling here. We're getting a little bit overbought. We've got a weak MACD, so no doubt we see the bears ambush very soon and maybe even lock in a potential bull trap, and therefore see the market turn away from this level and look down towards 112.65. All eyes on the Bank of England as we now see whether the market can view a rate hike from the Bank of England or they put their hands on and hold. That is no change. The bullish outside range day coming back into play. Now, if you look at this pattern, you can see that you've got rising indicator as a decline in price, which is bullish divergence. We've got a hammer, and also we've got a bullish outside range day from the close from New York this morning. In light of all these features, I do anticipate that we will eventually see a further rise and look up towards 132.50 to 133.20, which is the trigger level, I believe. Bringing this down a little bit, you can see that just around this 133.30 level, it's a little bit away. I'm being a little bit cautious to this outside range there because it is a bit of a strong move up. So I would like confirmation, because if we do clear 133.20, the target will be confirmed to 133.90 to 134.60. CAD Yen still a little bit choppy here, but nevertheless, The weak MACD, I feel, will limit any further upside gains beyond the level, which comes in roughly around 89.20 to around 89.30. Above there, sees a cap at 89 figure. The stab to the downside for gold rejects that 1,757 bearish trigger level, posts a hammer and puts a stronger play into the European session. It is viewed that we could see once again this market continuing to chop and change after very much a bearish attempt has turned into a bullish one now, and looking up towards 1,788 to 90, with a cap still remaining around 1,815. And finishing up with oil, the market is attempting to try and come back after the recent outside range day and a cap around 73.20. In light of the weak pattern and a little bit of divergence there, I feel the market will fail towards the top side and look back towards that $69 base and reassess from there. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the rest of the day.